Oil is telling one story and the stock market is telling another. Who do you believe? In this video, we are going to determine what's happening right here and now. My name is David Quinteri, and I have been looking into this information for well over a decade, trying to dissect and understand what's really going on as we peel back all of these layers. I think it's really important for you to pay attention. So let's begin. You came here for the truth, so let me unveil that for you. First things first, let's do it. Hedge funds ultra bearish. Oil bets signal US recession angst. You could see right here the most bearish since 2011. Aggressive positioning risks overcorrection and volatility. This is usually what happens. Let me tell you right now, for those who aren't aware, you can see what goes on with oil, that it's volatile, number one, but that it's extremely important because not only do commodity traders pay attention to oil, everybody is paying attention to oil. And why is that the case? Well, it tells us, it gives us signals about the economy. That's one thing. But at the same time, it affects literally everybody. The transport immediately goes up or down as a result of the price of oil. But at the same time, you can look at how intertwined it is with basically everything. So not only is like your shipping pricing going to increase, maybe your airline tickets going to increase, you also will see that in just about every good, because that is going to make it more expensive to bring from one place to another. And that's why we need to be understanding all the intricacies of oil. And let's get into that more right here. Money managers that trade derivatives linked to oil and fuel prices are about as bearish as they've been in more than a decade, suggesting that they're braced for a recession that could cause contracts from crude to jet fuel to take another tumble. In addition to this, we are going to look at what's been happening, some developments in oil, and I think is really key. What about shale? A lot of stuff happening. Let's get into that in 1 second. The trading positions for these non-commercial players such as hedge funds are near the most bearish since at least 2011. You could see what's going on. Yes, oh no, we're doing the restrictions. We don't need as much. And remember, the price of oil went down like into the negative in some cases. It was absurd. And then the reopening, oh, suddenly, and then you saw oil surging up. Right now, as I record this video, it's probably somewhere around $70 a barrel for Brent. And we are definitely off top, but right now it's kind of this wait and see moment. Okay, so that's price action. But I wanted to show you this as well, why the Middle East will be vital in any US-China conflict. Because of course what's happening right now is we are seeing some significance with China signing deals with Qatar, signing deals with Saudi Arabia and other countries in this region, where before, not that long ago, the United States had such a stronghold on this area. China is heavily dependent on energy imports from the Middle East and has struggled in recent years to keep up with its rising energy demand. They are trying to do more and more. They're doing deals left, right, and center with those in the Middle East. This is a big one, okay? I know a lot of people talk about energy independence of the United States. Things have changed. U.S. shale production is set for a rapid decline. Yes, you heard me correctly, okay? Even though the price right now at, let's say, $70 a barrel, it was at $80 a barrel for a while. This is going to change. Okay, so you could see that some are suggesting that shale production would rise through the end of 2024. Worrying signs production may already be slowing. And you'll see that right here. Two main drivers of the U.S. shale production. DUC, they describe that here down below. I'll show you withdrawals and the rig count are in decline, while 82% of wells drilled in 2022 were to replace legacy production. So that's drilled but uncompleted. So I think that's important just to see what's happening. Now, when we're looking at shale, I think it's really important to see something very clearly. So it is more expensive in most cases, other than for some examples. Most cases, it's going to cost a lot to pull that out of the ground. This isn't Saudi Arabia. This isn't, knock on the floor and you get a geyser coming out. No, that's not the way it works. So it's expensive, it's time consuming. And, there's a lot of talk about what happens with the water table. There's a lot of talk about, the earthquakes as a result, potentially. So many things. But the point here is that at $70 a barrel, $80 a barrel, it should be profitable for a lot more companies. But what are they doing? They're not doing this. They're not digging in. They're not making this happen. So it tells us something about the future of shale in the United States. It better be real cheap or they're not going to go ahead with it. I've noted some that were $40 a barrel at profit, but it all depends. I mean, how much of that can they do? So yeah, the US could have energy independence and the US could be exporting everywhere in abundance, but there's some difficulties with that, as well as doesn't look like it's going to happen. They're shutting them down rather than opening them up. Houthis sign the deal with China for oil exploration in Yemen. This is another thing because of what's happening in this region. You have Iran backing the Houthis in Yemen. At the same time, Saudi is saying, no, that's not the legitimate government. This government is, okay? And so they're basically fighting a proxy war in between each other. The good news has been that Iran and Saudi, along with China in the middle, has said, we want to be, working towards resolution. Let's, come to terms. And this is two very distinct nations, okay? Iran and Saudi. So the fact that this is happening all right now is just like a million different moving parts. And so that's a region, of course, with a lot of oil exports. And at the same time, what we can see is that they seem to be moving east. Okay, all these countries are basically partnering and doing deals, agreements, any sort of thing with East, whether that's China or others. The next part of this is really what I think is, a lot of the reason for all this. Fed's Bullard sees 2 more interest rate hikes needed in 2023 to cool prices. He favors sooner rather than later on hikes. It's a great time to fight inflation amid low unemployment. So he's saying, if you're going to do something, do it now while we have the time, while we can. And they don't want the 70s repeated, all that kind of stuff. Now, he's the one that's been very vocal about this. We need to go hard. We need to do things. He even mentioned the number of 6% for the Fed funds rate. Others have said, maybe we won't. I think it was Kashkari who said, maybe we won't increase at the next meeting, but the one after that, we'll kind of wait and see it, and then, we can go through with that. So this is really up in the air. But the point is that at this time, we are really being upended by the fact that there's a slowdown happening. And part of this is, of course, because the tightening of monetary policy that we're experiencing after, by the way, trillions upon trillions entering the system. So it's kind of like, 180-degree difference. But that's part of what's happening with oil. You see the connection there? Very clear. Yes, you do have some fundamentals, other aspects with the drilling, the shale, and so on, as I mentioned. But let's not forget monetary policy. All right, so check this out. With consumers, you got the price rising, you got interest rates rising, debt is accumulating, and so on. Consumers are still spending more dollars because things cost more, but they're buying fewer goods and services. Adjusted for inflation, they're talking about, the increases in retail sales and so on. I have been talking about this for so long, okay? I feel like I'm repeating myself over and over again. And please, let me know in the comments below if you ever heard me say this. Yes, the GDP could be up. Yes, people could be spending, consumers could be spending a lot of money. But what does the fact that the credit card debt and every other form of debt at a record level, buy now, pay later at a record level, signal about purchases? It's that things cost more than they did before. And so they have to buy the food, the energy, the shelter. And yeah, when you total up the dollars spent, okay, it's a lot of money. But at the same time, you could see that they're not really buying as much as they did before. And we're generalizing here. Okay, of course, you got to do that. But that's just the way this goes. Think about that. The total dollars is something very different, in fact, when you look at this, over the last few years, at least since 2020, some big changes. So do you see? Very important stuff, okay? 30-year mortgage rates approaching 7% again. Housing will suffer. I'm not so sure about that because people don't care anymore, it seems. The price has barely declined When you look at a national average in the United States and in Canada, it's basically nothing. Yes, we've gone off those crazy prices. You know, whenever I look at some of these stock market and housing market and different bubbles experienced, what I usually do is I usually cut off the tops. Okay, visually, I almost think of those didn't happen because those are anomalies. Those are very short periods of time usually. So in my mind, I discount those. And the same with the bottoms, and kind of take that, you know, where was the bulk of this action? And so when we look at that, pricing for real estate is just, I mean, it's up. You know, people, they want their homes. Whether or not they can afford them here, you know, that's a different story. But you could see that. So as the prices move up, they're going to buy a home over buying, let's say, new clothes, for instance. They're really trying for that. At the same time, you see car loans, so expensive, the debt, all these things add up, all of that, and you get a big problem. And that's why even if it's not a recession, official recession, a slowdown with higher interest rates is just, it's inevitable. So what are they going to do? What's the Fed going to do? I don't know. You tell me. Because a lot of people think, oh, don't worry, nothing's going to happen. Well, not so, honestly, like, I'm not so sure about that. They keep talking about this over and over again, and I really, truly just don't know what to expect. You got the debt ceiling crisis. Everything is piling up. And if you want to know what's happening with this debt ceiling crisis, watch this. 3 scenarios for this debt ceiling crisis. Click on this video and I'll see you there. Take care.